18,091 on the Nifty.
Close to about 150 points on the Nifty.
Nifty as well has come off from the highs of the day, still maintaining above that 18,100 mark.
It could have been a lot better, I think one has to say that, because at about 18,100, I think the market is showing some signs of hesitation.
The Nifty ends at around the 18,150 odd mark. The Nifty Bank came off 400 points from the high point of the day, but the mid-cap index ended with a gain of around 0.8% and more number of stocks advancing in comparison to the number of stocks that are declining.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra. Here are the headlines for the day. Dalal Street hits the highest level in 10 months. Sensex reclaims 61,000 and Nifty gains 130 points despite a decline across bank stocks. Tata Steel slips in a weak show with slimmer margins and expectations of a softer second half for its European business. Sun Pharma delivers in Q2, soars 2% despite weakness from Taro. Healthcare stocks rally between 1 and 6% as revenues are expected to only grow. Nykaa soars 3% after a decent set in the second quarter. Delivery rallies 10% after months of a sell-off. Auto companies report a mixed bag in October, while robust passenger vehicle and EV sales power Tata Motors. CV maker Ashok Leyland and tractor maker Escorts see strong sales. Bajaj Auto continues to report weakness in exports. Okay, here's the lineup of what we have in store for you. It's a packed show today. In Market Opinion, we have Gautam Shah, the founder and chief strategist of Goldilocks Premium Research. And in Big Corporate Voices, we have R. Shankar Raman, who's the whole-time director and CFO of L&T, and Rakesh Sharma, the executive director at Bajaj Auto. Okay, all right, with that, we'll start with the day's trading action now. Dalal Street hit the highest level in 10 months as the bulls maintained the winning momentum. Sensex gained nearly 400 points and the Nifty gained over 100 points. All this despite a decline in bank stocks. Prashant Nair is here with the market wrap. Prashant.
Well, it was a pretty good session for the market. The index cruising closer and closer to that all-time high level. There was some hesitation mid-session at about 18,100, which I guess was the most traded sort of price point on the Nifty today. But by close, we sort of moved higher once again, almost at about 30 points short of the day's high. Banks underperformed. PSU banks had done very well. That pulled back. Private banks also lower. Axis and PNB, just to give you an example, one from the private space, one from the PSU bank space, which saw profit booking today. What was higher? Metals as a pack moved higher. We had pharmaceutical names and the government companies, the CPSE index, which did very, very well. A bunch of names. So on the Nifty, old economy names were all the rage. NTPC, Power Grid, Grasim, Divi's Laboratories was something which did well. And Adani Group stocks are back in focus. So Adani Enterprises and Ports both did quite well as part of the Nifty. The broader gains and advances outnumbered declines, not by a huge margin, but comfortably so. Varun Beverages, Adani Wilmar, NMDC, Renuka Sugars, CMS Info, Godfrey Phillips. Delivery was locked up 10%. And Circuit, after, of course, what has been a very damaging fall, Heidelberg Cements, JK Lakshmi, and something like a Gokuldas Exports doing very well as well. I mean, as of today's close, the Nifty is just 2.5% away from its previous all-time high of 18,604, which was made in October of 2021. So we're almost there. I mean, between now and then, you've got two things. You've got the ISM manufacturing survey out of the US tonight, and then you've got the Fed decision, which comes out tomorrow night, to which markets here will react on Thursday morning. A 75 basis point is priced in, but any talk that the pace of hikes will slow down from here, I think could propel the next move for markets. Back to you.
All right. Okay, Prashant, thank you so much for bringing that market update for us. Let's get you some market opinion now. We have Gautam Shah, founder and chief strategist at Goldilocks Premium Research, who said that he expects the market to face resistance at 18,100 levels. He added that he is betting big on banks, autos and capital goods. Take a look.
Well, this kissing distance hasn't been going so well for the last 6 months because we've attempted to get past this 18,000, 18,100 area multiple times, but we've always found some resistance. In fact, the market has topped out around this level a couple of times this year. Indian markets At this point, the fact that since there are no topping out signs, the leadership has returned, VIX has collapsed, seasonally we are in a very positive period, banks have started to do well. I think there are just too many factors which suggest that this attempt should take the Nifty past 18,100, which has been the big resistance. And once that gets confirmed on a closing basis, we should see new lifetime highs past 18,600. Clearly, it's all about the banks. I think the kind of outperformance that it's seen in the recent past and the fact that it's just 1.5% away from lifetime high tells me that banks are going to lead the way even from here. So our working target near term would be about 41,800, which was the previous high. I think in this attempt, we will get past that number. And once that confirmation comes, we should see 43,000 to 43,500. Apart from the usual poster boys, which is ICICI Bank and SBI and maybe a Canara and BOB, I think some of the other underperformers are also attempting a comeback. So I would still be very, very positive on banks, followed by autos and capital goods.
Okay, all right. That is some expert opinion coming in. Let's move on to the second headline now. Tata Steel fell 0.25% after the company reported a weak set in the second quarter. Slimmer margins and expectations of a softer second half for its European business weighed on sentiment as well. Nigel D'Souza is here with all those details. Nigel.
Well, that's right. Tata Steel's numbers were a miss. The consolidated EBITDA didn't miss estimates as well as the margins. For Tata Steel, we look at the geographic breakup. And for the India business, well, the number came in, the EBITDA per ton came in at sub 9,000 rupees per ton, which was a miss in comparison to the 11,000 rupees odd that we were working with. European business more or less in line at around $115 per ton. Two big reasons for the miss. One was that steel prices were weaker. The second factor was that input costs remain elevated and they didn't get benefit of lower input costs, which could flow through in the coming quarters. The net debt as well ballooned up by close to 17,000 crores, primarily because of the NILL acquisition, the capex that they spent, and also they paid out dividend. Now, I spoke to the management on the call, and in fact, they gave us two big takeaways. One is coking coal costs will be lower by around $90 to around $100 per ton for the India and Europe business, which will be some bit of relief. And the second factor, they admitted that yes, the European business will struggle a little bit in the second half of the year, and the EBITDA will be low in the second half in comparison to the first half of the year, though it will not move into the negative terrain. CLSA, well, they downgraded the stock. They cut the target price as well as cut the EBITDA estimates. They expect the India business margins to improve, though they see some risk to Indian steel prices because it's trading at a premium in comparison to imported steel. While on the European business, they say that there could be meaningful downside to that business.
Most of the coking coal we used was coking coal that we had bought in the previous quarter. So we really did not get any benefit on an average. Of course, the coking coal consumption cost in September was lower than July. But July and August, it was actually moving upwards rather than downwards. So we'll start seeing the benefit in Q3. Europe may be about $100. India would be about $90. The second half for Europe will not be as good as the first half. That is clear, simply because the rising energy costs would have an impact, though over the last 3 weeks, as you would know, the gas prices have dropped very significantly. So maybe Q4 will not be as bad as we thought it would be. No, not negative. It won't be negative, but let's see where it is.
Okay, all right. That is the word coming in from Tata Steel management. Moving on to the third headline today. Sun Pharma gained over 2% after the company reported a good set in the second quarter, despite the weakness that it saw from Taro. Ekta Batra is here with all those details. Ekta.
Well, yes, for Sun Pharma this quarter, it was largely an operating beat that they reported. So the revenue was up around 14% The street was anticipating around a 13% growth. Margins came in at around 27% versus expectations of around 26%. And the better operating performance along with the lower tax rate really aided the profit this quarter, which was higher than expectations. Now, the global specialty sales were up around 25% plus. So that continued its momentum from the previous quarter. And was one of the key drivers of the numbers this time round, simply because Taro had disappointed a couple of days ago. The Taro disappointment probably reflected in the total US sales they reported this quarter, which came in at around $412 million versus expectations of around $420 million. Remember that Taro reported $130 million in terms of sales versus expectations of $160 million. Lastly, India was up around 8.5%. The street was expecting around double-digit growth this time, 14 to 15%. So maybe that was a little bit of a disappointment. But overall, steady, strong quarter coming in for Sun Pharma, especially on the operating level.
Well, that is about Sun Pharma, but Ekta, stay with us because healthcare and hospital stocks, they have been buzzing in trade. What's helping here? What's happening?
Well, yes, the healthcare delivery stocks were buzzing in today's trading session. The diagnostic companies such as Dr. Lal's as well as Metropolis were higher. Both the stocks, for example, are still to report their numbers. They both will be releasing numbers on the 8th of November. The street will be watching for the base business performance on a Q-on-Q basis, which is basically the non-COVID-19 revenue for a lot of the diagnostic companies, considering that COVID-19 revenues are now out of the system nearly. And what kind of competition we are seeing in the diagnostic space could have in terms of an impact on the non-COVID business as well as the margins for these companies. Separately, hospital stocks have been in focus, buzzing around. A lot of the companies, in fact, are still to release their numbers. The likes of Narayana, Max at fresh 52-week highs within the hospital space. Now, in terms of hospitals, the street will be watching for momentum, which started last quarter in terms of the electives, surgeries increasing post-COVID, and hence the occupancies as well as the average revenue per bed increasing for a lot of these companies. International patient inflow is also expected to rise as compared to the previous quarter, and that is expected to aid the overall earnings this time round.
Okay, all right, Ekta, thank you so much for bringing us all of those details. Moving on, Global Health, which operates Medanta Hospitals, will launch its IPO on November 3rd to raise around 2,205 crore rupees. The IPO consists of a fresh issue aggregating to 500 crore rupees and an offer for sale of nearly 5.08 crore equity shares by promoters. The company's CEO, Pankaj Sahani, said that Carlyle would be making a complete exit with the IPO. He added that the company plans to strengthen its balance sheet with this IPO. Listen in.
Out of the total funds which we receive, the company will be taking 500 crores in its primary, and the remaining will be the offer for sale, which is largely the Carlyle Group, which owns about 20% of the stake, and they will be exiting through the process of the IPO. From the 500 crores that the company raises, about 375 crores will be used for repayment of loans. These are primarily loans which we had taken for our projects in Lucknow and Patna, and that will allow us to further firm up our balance sheet. We already have a fairly strong balance sheet, but this will give us a further cushion and also allow us to be able to optimize on our financing costs and set us up for the growth that we see coming in the future.
Okay, all right, that's the word coming in from Medanta. But with that, we'll slip into a short break now. Stay tuned, we'll be back in a bit with all the other headlines.